Good morning, everyone. I want to thank you for taking your time to attend this session. We're doing an overview for Freedom Equity Group and the Weiner region. And you can hold your questions and everything to the end. We'll get started here in just a second, but we're going to get started, and I'm sure you're going to enjoy this. We're recording this as we're going to be utilizing this piece for our future business overview endeavors. So we're going to get started right here. Now, our goal as an agency is to build the largest insurance agency in the world. Now, a little bit about myself. This is going on my 34th year in the insurance industry. I'm considered one of the pioneers in the living benefits movement. I was one of the first ones to see it back in 1998, and I went to work for an insurance company that was a subsidiary of the three Blue Cross families of companies. This was basically Blue Cross of New Mexico, Texas, and Illinois, which became known as Healthcare Service Corporation. And I did so much production with them that, in fact, I became 25% of their app count. By 2001, in the parent company's annual report, they did a whole paragraph about me and our impact into their company. I've produced as much as $1.4 million in life insurance premium in a year. I was asked to be a participant in the first World Conference for Critical Illness Insurance, which was back in 2003. I was named the state chairman for Missouri for the National Business Advisory Board, and I'm currently one of the field CEOs for an agency called Freedom Equity Group. Now, the history of Freedom Equity Group, I actually go back to the very beginning, way back in 1991. And we started with 8 salespeople, and we did $1.6 million in premium. It's before we introduced an agent-owned equity program, before we did any kind of innovative compensation plans. It was just a plain Jane traditional life insurance contract with a life insurance carrier, and we did a little bit of premium. In 1992, we introduced the floating management bonus and equity share program, and 8,000 insurance people joined our agency in 1992. The floating management bonus was brought to the table. In 1996, we sold the agency after producing over $100 million in premium in 4.5 years and recruiting over 25,000 people to the agency. After our covenants not to compete expired, in 2003, we re-entered the distribution of Freedom Equity Group. Today, we are one of the largest life insurance marketing groups in the United States. Last year, we were number 3 producing agency for the largest life insurance company in the world, while also leading 3 other insurance companies simultaneously. We issued and paid for over $20 million in life insurance premium, as well as over $50 million in annuity premium in 2015. The retired president of Global Life Operations for AIG has joined our agency management team in 2016. FEG's CEO and one of our clients were interviewed for the first ever documentary on living benefits, which is being aired on public broadcasting next month, March of 2016. Now, you as an agent, as you're sitting here watching this today, you've got some issues. Cold calling no longer works. I can give you a gazillion reasons why, but the main reason is most people don't want to be bothered by a sales call anymore. Telemarketing produces abysmal results. You could blame the do not call us, but we can't. It's because we don't even use phones at home anymore. We're a smartphone world. Direct mail doesn't work because we're an online world. We pay our bills online. We do everything online. And they'll say, well, why don't I just do the insurance business online? Well, guess what? If you got an email from a stranger with an attachment, would you open it? Probably not. You have to change the way you do business. You have to reverse the process, and we have. You got to get the consumers to contact you, not you contact the consumers. And why have so many independent agents quit the industry in the last 10 years? We've gone from 1 million+ independent life producers to under 500,000, and they say that figure is going to be cut in half again in the next 5 years. You can't blame old age. The reality is most of us cannot cope how to do business in the millennium. So we're going to give you a new idea, a new day. I want you to imagine consumers calling you. No more cold calling. You can work from home taking 5 to 7 appointments a day. We're going to teach you how to compete with the 88 million people that are saving money in 401k types of plans, you're going to see a brief overview of it today. And even when the contribution is being matched, you're going to be educated enough to replace 99.9% of those contributions. We have bought 40,000 spots beginning next month on Fox, CNN, Bloomberg, and Disney to introduce living benefit life insurance to the American people. And you will have the ability to participate with your contract in an agency equity share program. These are amazing appointments. These are consumers who've gone looking for us. These are consumers that have gone online to a website looking for life insurance, not to sign up to win a free iPad, but really looking for life insurance. Our call centers that we engage and pay for in Texas and in the state of Washington call these consumers back and they scrub them. We only want to see people between 30 and 60 years of age and pretty much healthy. You take the appointment. They're put online with you in your office. You're logged in to your computer with your phone, and that consumer, after we've scrubbed them, is transferred live to you. Not you dialing out to find them, not them being a lead to you, but they're transferred live to you to take that phone call, and we are going to teach you word for word what to say. During the sales process, the initial sale is very simple. They're looking for term life insurance, and you'll be trained to do the term life sale. It is a piece of cake. And I'll kind of role play a tiny bit of what is going to be said on the phone right now. Basically, the consumer is transferred to you, and you say, well, Joe, you know, your information is going to populate on my computer screen in a couple of minutes, and rather than me asking the same questions you've already been asked a couple of times, I do have a question to ask you. And it's kind of corny and kind of scary, but I want to ask you a crazy question. May I? And the client's going to say, okay. You know, people get up in the morning, and they got to go to work, or they got chores to do, or they got things to do. Why did you get up this morning and decide you wanted to go buy life insurance? Let them answer the question. They're going to give you an answer. And then basically I say, you know what, Joe? Today's kind of like your lucky day. I know that's really corny, but you could have gotten any Tom, Dick, or Harry that sells life insurance for a living, the kind of insurance you got to lay in a box. But I'm going to tell you right now, one of our clients was interviewed for a documentary airing next month on public broadcasting TV, hosted by the infamous James Earl Jones. It's the first documentary ever on the new type of life insurance. And he bought a policy because he wanted to buy a policy from an insurance company that was a permanent plan that was going to give him retirement income. And he made one payment. He was a doctor. And 30 days after he bought the policy and made one payment, he was unfortunately had symptoms of a throat issue. He was diagnosed with throat cancer. That doctor's death benefit a few weeks later, $734,000 of life insurance, was released to him, and he was not in a box. I can tell you it's a new type of life insurance, and this is a huge, big deal. And what we tell the client at that point in time is, you know, here's the facts. 7 out of 10 people that get sick under the age of 65 don't die. They die later. Everybody dies, but not dead. Average age of a claim, they don't tell you this in the insurance school, is 43 for getting sick. Average age of death still is 74 and 80, 74 male, age 80. We know 84% died of heart attack, strokes, and cancer. But did you know 52% of the claims for major illness in this country is between 41 and 50? And I'm going to cover more of that in a second. But that's part of our script. And during the process, after we've made the sale on the term insurance, we ask the question, because I have set the demographics to do this, are you saving now for retirement? Does your employer give you any free money? Do they match your contribution? We want to show you how to have 300% more income at retirement time without you saving one extra penny. How do you do that? Well, we do a screen share and we record an interview, but we educate you on eliminating risk from your diet. eliminating taxation from your diet, and reducing what you're spending for your advice. It's a table talk designed to replace the 401k type of contribution. And by the way, fancy words aren't going to get the job done. You have to have unrefutable math. The math has to make sense. Because most people would assume a 40-year-old saving $100 a week and getting matching funds of $100 a week and having a balance of $25,000 could never be beaten by a fully commissionable $400 a month life insurance premium. Every year in this country, tons of us, millions of us, suffer critical or chronic illness. And as you heard me say a second ago, the average age of a claim is 43 years of age. 62% of us that gone bankrupt last year was for medical incapacitation. Almost 8 in 10 people, 78%, had adequate health coverage. And think about this. The average age of a medical BK in this country is 44. Why did they go bankrupt? Because their paycheck stopped. Who's going to pay for your bills? Every one of you that's in attendance today, whether you're a financial service professional or a consumer, you got house payments, car notes. You're trying to fund your retirement. You're trying to put food on your table. You're trying to keep promises to your children. You still got your everyday bills. How long can you go if your income stops? You have health insurance. Will your health insurance make your house note? Will your health insurance replace your income? Do you have enough cash values in your life insurance contract right now to hit retirement? Do you realize the average person needs to have a funded retirement needs $1 million minimum? How many watching today have $1 million tucked away already? You would have problems just putting food on the table if the income stream stopped. And that's most of us. That's just the reality. Dr. Marius Bernard, his brother Christian Bernard, are given the credit for starting this revolution of change in the insurance industry. He did the very first human-to-human heart transplant in December of 1967. He argued and became an advocate for change that came over the last 2 decades. It's here now. These changes don't cost the consumer a penny. The companies that charge consumers money to accelerate their life insurance benefit, if you're buying specialized cancer plans or you're buying a stroke policy, you shouldn't be paying a penny, 1 iota, for these new benefits. These benefits should not cost anything. And to show you what we're talking about from a claim standpoint, I'm going to pop open this other screen right here, and I'm going to go like this, and we're going to go right here. This was our first claim just a couple of years ago. In 2011, Johnny was 48 years old, and he replaced his 20-year term plan. He had a plan actually with Forrester's Life, and the only reason he bought the new plan was because it was $25 a month less. A few months into the policy, he was diagnosed with stage 4 cancer. We released with him breathing 89% of his death benefit up front. Bob Curry, who is the subject of a YouTube, you can actually look it up, it's called The Other Guy, it was done by National Life Group, was a client I wrote personally. He was in San Diego, California. He was 59 years of age. I replaced his existing policy. He had permanent protection to have a policy that had living benefits attached to it. A couple of years later, he was a retired Navy SEAL. He exercised every day, and his leg was bothering him. He went to a doctor. They sent him to a specialist. A couple of weeks later, he was diagnosed with ALS. Within 48 hours, we had $189,000 of his death benefit inside his checking account, allowing him to quit his job that day and have some quality of life. Well, his mechanical skills and his daily functions went down to almost nothing. He had money while he was breathing to do what I would call his bucket list. Greg is an insurance agent of ours inside our agency. I know Greg well. He lived up in Oregon. And he, in September of 2014, he bought a brand new policy with us, so for one of the large insurance companies. He had to do a physical. He had extensive blood work. And his doctor suggested he get a colonoscopy done in November. Thank God he already had our policy. And guess what? He was diagnosed with stage 3 cancer after passing the physical to get preferred rates. To put his cancer in remission, he needed money. Health insurance didn't pick up the tab for the experimental treatment that he wanted to get done and all the co-pays and everything else. But within a few weeks, our life insurance contract released to him $198,000, of which he spent $100,000 to get better. He's alive in remission today. The client that I talked about that was interviewed on the TV documentary is a doctor out of Massachusetts, and he bought it for tax redistribution. He didn't even understand what living benefits was, and he was diagnosed with throat cancer, and he is so grateful because his income stopped from his practice. He had to fight for his life for cancer. His cancer's in remission today, thank God. But he's interviewed on the TV special. He's a doctor, and he goes, "This needs to be told to every American across the world." And I'm going to go like this, and I'm going to move back to our primary presentation. But that kind of gives you a little bit of the gist of what this is all physically about. Now, when Americans are saving money, they've been saving money since 1980 in what? 401ks and IRAs. Even Time Magazine in 2009 said it was time to retire the 401k plan. And you as Americans, you've been out there literally, for lack of a better word, what have you been physically doing? You've been gambling with your retirement. You're being feed to death. I mean, horrendously feed to death. And you got a bullseye on your back with taxation. Consumer Reports says, gotcha, 401ks. George Bush went to the Middle East looking for WMDs. You know, he didn't find it, but I did. I found weapons of mass decumulation, fees, risk, and taxes. Professor Macchio, a PhD, a professor at Princeton University, who wrote the book A Random Walk Down Wall Street, says if fees amount to 2%, it can devour half of your retirement savings. Robert Hilton said the average family will spend $155,000 in fees over the course of their lifetime. The government for the last 3 decades has been encouraging you to save money on your job. Yes, save money on your job. And he says, and I want your money. And he's going to give you a refund. The average American saves $100 a week on their job. If you add that up, it's almost $5,000 a year, and you're getting $1,500 in refunds. If you do that for 30 years, Uncle Sam gave you $45,000 and change. But if you look at the taxes that you paid, you'll give back, literally, for lack of a better word, close to $289,000. And I promised you an overview, so I'm going to pull up an overview really quick for you so you can actually see this, and then we'll continue on here. But this overview is real. Here's a person right here, a 40-year-old, saving $100 a week, $400 a month. He's got 100% matching funds, and he's got a current value in his 401k of $25,000. Now, we know the stock market over the last 17 years has an actual rate of return of 3.04%. And if he's 40 years of age, and he started taking out a net income of $42,000 a year, his money lasted 4 years. That blue line right there, folks, I'm going to talk about more extensively, that's the insurance industry. That's us. Our $400 a month life policy is able to last all the way projected income, age 120. I'm not here to teach how our product works today. It's just a brief overview. But if I gave them the same projected rate of return that we have in our life policy, the 401k would last 10 years of $42,000 net income. And the bottom line is why. The life insurance policy has fees. So the first time you, the professional, is going to be taught how to open up the hood and go line by line what it costs to own a life insurance contract, what we take out of the contract in actual fees, expense loading, charges, mortality charges, everything. You put $144,000 in, and we charge that client $48,000 in line item costs between the age of 40 and age 80. Our client spent taxes because there was no refund. Our client spent $96,000. The reason they're out of money isn't because of the projection. The reason they're out of money is in the program that they're in right now, they got to pay fees and tax. The fees were over $350,000. And by the way, from Washington, we know fees range between 3 and 5%. This is assuming a 3% total fee. and they got to pay the taxes on their distribution. Folks, as I go back in here and we just do a little bit of education. The reality is, do our clients want to know how we do it? Well, they do. Well, Warren Buffett, the second wealthiest man in the world, says rule number one in money, you best not lose. Rule number two, don't forget rule number one. Jack Bogle, the founder of the Vanguard Fund, been in the business 60 years. He's always rolled out every time that things go wrong. You best be prepared for two more declines of 25 to 30%, maybe even a 50% in the next decade. He also stated he's went through it before. 1973, the beginning of the millennium. He went through it in 2008, 2009. Hey, they're scary. Are you prepared to lose half of your nest egg? Tony Robbins wrote a book last year, Invest Like the Wealthy, where you participate in the gains but are guaranteed to never lose when the market drops. I ask a client all the time, do you want to be on the blue line or the red line? And while I didn't go into an extensive training, I showed you kind of the conclusion to the numbers. The bottom line reality is nobody wants to be on the red line. They're just not educated how to get to the blue line. And they assume, because they've been told and brainwashed, that life insurance contracts cost more than a straight investment. That's not factual. And when you're trained by us to understand those things, it's going to make you lethal. Taxes. We get to throw money in a 401k, no taxation, but when we spend it, we pay taxes. And when we die, we pay taxes. We grow just like a 401k, but we don't get the refund. And when we get to retirement time, we really take that client to a 0% tax bracket for distribution. And when we pass that money back to the families, we get them to a 0% taxable distribution. No income tax. That's strong stuff. I don't have to speculate our tax is going to go up in the future. I had Hillary Clinton on the campaign trail screaming, let's return to pre-1986 tax rates. Let's tax people bigger rates. Well, the Congressional Budget Office said a couple of years ago, if we don't change Social Security, Medicare, and Medicaid, guess what? If you're in a 25% tax bracket, you can expect to go to 63. We educate our clients how to get to a 0% tax bracket. And most of us are not saving enough. Do you realize that if your goal is $5,000 a month of income, and if you're able to get a return of 8%, which is a difficult thing to do, if you're 20 years of age, you'd have to put away $113 a month to the age of 65. If you were 30, $260 a month. If you're 40, $628 a month. If you're 50, $1,727 a month. And if you're 60, oh my God, if that doesn't give you a coronary, I don't know what will. $8,000 plus a month. So let's go back to you. If you're a well-dressed, articulate insurance professional, you have what it takes, and you can meet our qualifications, we would like to work with you and with our prospective clients generated via our national advertising campaign. We have amazing appointments that the consumers call us. We have a contractual equity share program between you and Freedom Equity Group, and we have an agency management team that includes the retired president of AIG Global Insurance Operations. So what do you have to do to get started? Well, for one, you're watching this overview. And when you're done with this overview, you're going to let us know if you want to go forward after seeing this overview, and then basically you'll call me up on the phone, and before I do an interview with you, I'll send you an overview of our compensation plan. So step number one is you've gone through this overview that I'm doing right now. Step number two, I need you to watch about 30 minutes of your time to actually understand how our comp plan works. Then you're going to have an interview. The interview is a one-on-one interview. It's with the person that brought you to the table. One of our management team might be with myself. Then you're going to set up and you're going to join Freedom Equity Group, and you're going to set up your business builder operating system. It's the only upfront fee you have in the whole scenario because it really is. We used to charge monthly for it. It's a one-time charge to set up your back office and your operating system. And I'm going to show you how important this operating system looks like. I'm going to pop it up on my screen right here. I'm going to put it up there in front of you and show you. The operating system looks like this. It's got your picture on it. It's got all kinds of things. It's got your back office. But right here, if you go, after we get done here and go visit mine, mine's at taxesnever.freedomequitygroup.com. There's the advertisement right there. It's already on the operating system. You can see what's going to be on national TV. And you can see right here, this is the documentary. You can actually preview the documentary that's hitting public broadcast next month. It's right there in my operating system. And as I go back here, so you'll join and get that all set up. Then the next step is you'll get contracted with our carriers. Our contracts are on the back of your operating system. There's no exceptions. You must be able to contract with our carriers. If you're going to leave your contracts with someone else, I can't take you into this pond. So I'm going to be very blunt. You must be able to contract with AIG, National Life Group, American National, Phoenix Life, F&G Life, American Equity, United Home Life. Next, with your recruiter or manager, you need to complete a financial needs analysis with your recruiter and commit to saving at least 10% of what you earn. If you decide to own an index life plan or a living benefit life plan with living benefits, you will get those plans for your household from the person that is recruiting you. Now, you do not have to buy life insurance in order to contract with us. You do not have to buy life insurance in order to take appointments in our traditional appointment program. But if you want to participate in the national advertising campaign, you cannot just be a peddler of product. You must become what we call a crusader. A crusader is someone that follows the Freedom Equity Group model, and this includes committing to saving money and owning living benefit life insurance. The next thing, commit to taking 15 minimum appointments a week. You set up your appointment account. Now, there's no upfront monies, no upfront deposit. We've got the best appointment. Now, the appointments are not free. They are $40 an appointment. But our lead vendor that does all our work for us, we've got a line of credit set up for every agent we take on. And the way it works is you're billing us on a month-to-month basis. You work for a month, and your bill, your invoice comes on the 12th of the next month, and then they debit your debit card or credit card on the 15th. In addition to taking your 15 appointments, and by the way, I want you to take 20 or 30 or 25. I've had people take as many as 40-plus appointments in a week. In addition to that, we want you to attend our daily sales meeting. You're going to set your goals every week. You're going to go in, and it's going to look just like this. And again, I'll pop up on what we call our tote board, and it looks just like this. And the course of the week, you can see you're logging in, you're setting your goals. There's all the goals right there at the beginning of the week, and then every day, how many sits did you take? How was your production for the day? And we want all of that literally in place. And you set your goals, and you report your numbers, and you check in daily. You'll need to attend an RV, a Regional Vice President School, and when the national convention comes in, if you want to participate in the national programs, you're going to have to be at the national convention. Last but not least, if you want to be in the equity share program, in your contract with Freedom Equity Group says we will share 50% of the proceeds of this agency if it's sold with our field force. And the requirement for you to get in to the equity share program is you have to earn a minimum of $100,000 in commissions one time in any 12-month time frame. So in conclusion, over the last few minutes, we've just shown you the pathway to your dreams. Provide security for you, your family, for business owners, families. We know you're going to achieve your dreams by helping others achieve theirs. In the process, all involved in our program will win. The question is, will you be a part of will you be coming with us? So I want you to get back with the person that invited you here today. Your next step is to watch the overview on compensation. And if you understand that and still want to go forward, your next step after that is an actual interview. My name is David Weiner. I want to thank you for being here today. You have a great and wonderful day, and you have a perfect day. And we'll see all of you basically fight the good fight together as we hit this national campaign. Again, thank you for your time. And